Hey, it's Elena Gordon, broker of record, Remax Gordon Group Realty, and I want to talk about the real estate market update today. I know there is so many different news right now, inflation and everything what's going on in the world, and price for the gas up and everything else. Yes, that's the news. If you talk about the real estate market, we always look at the data. We look on the numbers. And finally, we have Toronto Real Estate Board uploading the stats for June 2022. So let's look at the numbers. And when we talk about the numbers, we usually start with economic indicators. So real GPD growth is down and now it's 3.1%. Toronto employment growth is up and it's 8.5%. Toronto unemployment rate is down. It's a good news too, 6.2%. Inflation, yes, it's up 7.7%. But comparing to the different countries, actually we're not doing so bad yet. And Bank of Canada overnight rate, we have now 1.5%. And based on that, the prime rate in the banks in June 2022 was 3.7%. So we have all these different rates right now. For 1 year 4.74, 3 years 5.39, and 5 years 6.04. It's for fixed rate. Next one, let's go to look actually to the real estate numbers. And first we're going to look on the total residential transaction. And in June 2022 we had to compare to June 2021, we had minus 41.4% for residential transactions. And actually this indicator is show that it's not so bad everything. It's not like everyone is running, to put their house for sale because they cannot handle it. A year ago when we had a better market, we had 11,053 transaction, and this just in June 2022 we have 6,474 transaction. If you look on seasonally adjusted residential transaction number, so we don't have much difference, so it's minus 4.7%. Now let's look at the average price. The average price for June 2022 is still high. It's 1,146,254, and actually it's up by 5.3% to compare to June 2021. And if you look on seasonal adjusted numbers, in June 2022 we had a little drop by 3% in the price to compare to May 2022. And last month it was about the same too. The biggest drop we had in April 2022. So that shows that the price is not actually falling down. They're coming down little by little, but it's not so drastically down. Now let's look at the new listings. If we look at the total new listings in June 2022 to compare to June 2021, we have almost the same. It's about 16,000 for both years, so we have just 1% increase. It shows that not everyone is dropping everything and going to sell their house. It's not the recession how we had in 2008 in US. If we look on the sales to new listing ratio, now in June 2022 it's 40%, and compared the year ago in June 2021 we had 68%. Yes, the change over the year is minus 28%. And actually what this sales to new listing ratio shows, that shows what is market right now. Is it seller's market, is it balanced market, or it's the buyer's market. And usually between 40 to 60% sales to new listing ratio, we have a balanced market. Over 60% we have a seller's market. That's what we had for 3-4 months ago. And 0 to 40% it's a buyer's market. So we're not on the buyer's market yet. It's not so bad. Next indicator we usually look on, it's days on the market. When we talk about days on the market, we have two different indicators: property days on the market and listing days on the market. So listing days on the market, it shows how long that listing was on the market. Sometimes people list 2-3 times. For example, they want to sell with the offer presentation, with delayed offers, right? But this is wrong strategy and they cannot do it anymore. So they don't get their price and they're coming back again. So it will be another listing days on the market. But if we look at the property days on the market, so it will include all these different listings, all these 3 different periods, right? So, and property days on the market probably will be more realistic indicator what's going on in the market. And 24 days in June 2022, it's actually not so bad. Let's look to the next one. Next one, we usually look at the sales and average price by major home types. And it's very interesting information because we have 416 area and 905 area, and sometimes they perform like very differently. So if we look on the year-to-year change, we can see that in June 2022, 416 and 905 area for detached properties, they actually was almost the same change. It was 2.4% change. If we would look to the same indicators, for example, 2-3 months ago, we would have like 2-3 times more change in 905 area because people were moving out of Toronto. And now when the COVID restrictions lifted, so we can see that people are moving back, and plus the gas prices, that's very high. So, and it's not really practical to live very far from the job. And if we look, for example, on difference for semi-detached townhouses to compare to detached, yes, we have a bigger changes. Like for townhouse, we have 9.1% for 416 area, 8.3% for 905 area. So that shows that this property were more affordable for people, so they were tend to buy it more. Yes, it's easier to buy 900,000 property than it's like over 1.3 and 1.5. And this month shows actually good result for condo apartments. So they had actually the biggest increase over the year change, and especially 905 area. So looking at these numbers, actually we can say that it's not so bad everything. If we look at any stock markets or cryptocurrency, everything is actually falling down right now. The gas price is going up, and the real estate, yes, it's a big adjustment, but in reality, if we look at the number of sales, like people not dropping everything and they are running to sell their house. And if you look at the economics indicator, for example, employment rate is up, unemployment rate is down. Yes, people has a job and they have houses, they have equity in the houses. That means they're not going to drop everything and put them in the market like tomorrow. They have jobs, they can pay their mortgage. And I think it will mostly affect the people who just come into the market and people who over leverage themselves. For example, we had a big number of people who was refinancing their houses and getting cheaper mortgages with various rate and getting the equity from the house and putting it toward purchase of another investment houses. These people who over leverage themselves, so they probably will have a biggest impact from the interest rate adjustments and going up. And also another thing with real estate, we usually sell and buy in the same market. So if we're selling for less money, we'll buy for less money. So I will say it's not so bad. And actually, with prices going so high and so fast for last 2 years, it actually was becoming more dangerous, because you never know like how high it can go and what will happen. I will say, no one has a crystal ball and we don't know what's going to happen tomorrow, but looking at the numbers, actually, it doesn't look so bad. If you have any question about the real estate or price change for your house, give me a call. 647-400-9603 or reach me out through Facebook, Instagram or email. So all information below. If you like the video, give me a like, subscribe for our videos. Thank you. It was Helena Gordon with Remax Gordon Group Realty. See you soon.